Palantir Technologies has once again captured the spotlight in the stock market conversation, and this time it is due to a sharp pullback as well as news of executive stock sales that have left some investors questioning what this means for the company's future. The stock fell by almost 18% from its record high of $190, which was achieved on August 12th. While such a drop naturally raises eyebrows, it is also important to remember that the stock is still up by an extraordinary 106% since the beginning of the year. That kind of performance is far stronger than the overall market, and it demonstrates that even though the stock has taken a hit recently, it has already delivered huge returns for its shareholders. What has further intensified the conversation around Palantir is the news of significant insider selling. On August 21st, Chief Executive Officer Alex Karp sold shares worth more than $60 million, while Chief Technology Officer Shyam Sankar sold approximately $26 million worth of shares. Whenever insiders sell, investors naturally start to wonder if this means the leadership is signaling some sort of concern about the company's prospects. However, it is crucial to look at the context. Many executive sales are pre-planned as part of automatic trading schedules, or they are executed for tax purposes. In other words, they often do not represent a negative signal about the company. Moreover, even after these transactions, Alex Karp continues to hold around 6.4 million shares of Palantir, which amounts to about $1 billion in value. That means his personal financial future is still heavily tied to the company's performance, which should provide some reassurance to investors who worry that executives might be losing confidence. From a technical perspective, it also looks like Palantir's pullback might be stabilizing. Indicators such as Bollinger Bands, the Relative Strength Index, and the Average Directional Index show signs that the sharp downward move is slowing and could be leveling out. However, technical signals only tell part of the story because valuation concerns remain front and center when it comes to Palantir. Currently, Palantir trades at roughly 90 times forward sales and about 242 times forward adjusted earnings. Those are very high multiples compared to most companies in the Standard & Poor's 500 index, and it places Palantir among the most expensive stocks in that group. When a stock carries such high valuations, it can often be vulnerable to sudden pullbacks, especially when sentiment toward the broader artificial intelligence sector weakens. This is exactly what happened last week when OpenAI Chief Executive Officer Sam Altman warned that there might be a bubble forming in the artificial intelligence industry. That warning rattled investors, and Palantir was one of the companies hit the hardest because its stock had already been trading at such stretched valuation levels. Despite the volatility, Palantir continues to produce very strong results in its core business. During the second quarter, the company reported revenue above $1 billion for the first time, which marked a major milestone. United States commercial revenue surged 93% on a year-over-year basis, reaching $306 million, while government revenue rose by 53% to $426 million. These figures demonstrate that Palantir is achieving growth on multiple fronts, and importantly, it is not only relying on one area of business to drive its performance. Growth is also happening internationally, supported by the expansion of partnerships like the one with Sompo Holdings through Palantir Technologies Japan. This international growth broadens the company's reach and reduces the risk of being overly dependent on just one market. Another major driver for Palantir is the adoption of its artificial intelligence platform, known as AIP. This platform is being embraced across industries, and it positions Palantir as one of the leaders in the artificial intelligence field. The company has been securing major deals that reinforce its influence, including a recent $10 billion contract with the United States Army. Such contracts not only provide long-term revenue, but also show the trust and reliance that major institutions place on Palantir's technology. This combination of government and commercial wins strengthens Palantir's argument that it is not just participating in the artificial intelligence revolution, but it is helping to shape it. Even with these achievements, not all analysts are convinced that Palantir's stock price is justified. Rishi Jaluria from RBC remains cautious and has even suggested that the stock could see as much as 71% downside. After Palantir released earnings earlier this month that exceeded expectations, Jaluria did raise his price target, but only to $45, which is still the lowest price target among Wall Street analysts. He also maintained an underperform rating, pointing out that there are lingering questions about whether the momentum generated by the artificial intelligence platform can be sustained over the long term. This shows that while Palantir has a lot of potential, there are credible voices in the market who remain skeptical. At the same time, some institutional investors are moving in the opposite direction by increasing their positions in Palantir. For example, Lake Street Private Wealth has added to its stake, which demonstrates that there are investors with deep research capabilities who still see opportunity in the stock. However, it is also important to note that the current valuation of the stock appears to have already priced in years of future growth. This means that for new investors looking to enter the stock, there is not much margin for error, and even small disappointments in future performance could cause the stock to pull back significantly. In conclusion, the picture with Palantir is mixed. On one hand, there is no urgent reason to panic about Alex Karp's planned stock sales, especially since he continues to hold such a large personal stake in the company. On the other hand, the extreme valuation multiples of the stock mean that new investors should approach with caution. The company is performing impressively, it is securing huge contracts, and it is growing both in the United States and abroad. However, the stock market has already rewarded Palantir with very high expectations, and that makes it harder for the company to keep surprising investors on the upside. As a result, while existing investors might be able to ride out the volatility, potential new buyers should think carefully before jumping in at current levels. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.